In today's video, I will be unveiling my complete model that will set you up for retirement. I'm going to go over everything you need to know to equip yourself to navigate any financial market on any time frame. That's right, my model is completely fractal. Whether you're a swing trader or a day trader, it doesn't matter. So sit back, relax, take out your notepad because you're going to need it, and enjoy the path to financial freedom. Okay, so we will first start off with this sort of graphic that I have drawn out here, and then we will move up to this chart here, and I will go over everything that you need to know. So back on down towards our graphic here, and let's start off with what this actually is. So on the right, you can see that we do have sort of a CRT here. I will actually mark up the high and low of this candle. So there and there. This will obviously be easier to see when we are on the proper chart, but that will be the second half of the video. But let me first explain everything here. So first off, if you don't know what CRT is, I have made a complete playlist in order, so go and check that out if you haven't done so yet. So pretty much what CRT is you mark up the high and low of a candle, you then wait for one side of it to be purged, and then that sets your sort of bias towards the other end of the range. It has everything. You've got the bias, your turtle soup, the order block entry, breaker entry, FEG, and then your OTE. It pretty much unlocks ICT, as CRT is a complete system represented by candle ranges. So you can trade it in multiple ways, but this right here is my sort of A+ setup and what I trade on a day-to-day basis if it will form. I would say on average it does form maybe 3 times a week, but when it does, it is absolutely beautiful. So we will start at the left side here. Obviously you do start off with your uptrend. You see the market making higher highs and higher lows that we as ICT traders know. Obviously this low here does get taken. This is just a turtle soup. We are gathering liquidity here with this turtle soup. We're taking out this low, and that obviously does give us the strength to then move towards these highs here. But before we do move up towards that level, we do have this engineered liquidity here, which is a trend line that sort of newbies would call it. So you've got the noobs following the trend line, which will work for a bit. Obviously we have a top here, top here. If you are longing this all the way up, it will work, but eventually it does sort of fall apart when it does break that trend line. As you'll see, it will break it there and then actually regain it. So a lot of people will go long again if they're trading trend lines, and then they will get wrecked. But with my model, that is not the case. So what we're looking at here is we move into a high time frame key level here. A lot of people will be shorting, and you'll see on the sort of normal chart when I show you where people will have their stop losses just above this higher time frame key level, and then this will happen. We'll come up here, take out all those short trades that have their stops above this level, come back down towards the sort of trend line here. A lot of people will then stay short after seeing this high time frame key level lost. Then we move down, take out this liquidity that I did mention earlier, and then we manage to move back up here. And then this is what this is that I have marked up here. We're taking out the stop losses from both people that were short from the high time frame key level, and then the people that were short from falling below it again. So these are the first stops. A lot of people will then sort of short here thinking this is the end of it, and this is where a lot of people get wrecked. This is where I did go wrong at the start. I thought, short the first sort of CRT that you do see at a high time frame key level. This is wrong. With my model, we are looking for sort of 3 purges or 3 pushes above that high time frame key level. So we have this one that takes out the stops. This one again, this is called a liquidity sweep. And then we have the last one here, which does sort of set the high. And this is where a lot of people will be getting even more bullish once they see these highs being broken. A lot of people will be longing. And then this is where we sort of see this bullish order flow flip towards that bearish order flow. But that does not happen until we see our change in state of delivery. What is a change of state in delivery, you may ask? Well, that is a breaker, or you could use an IFEG or even an order block. Those are the 3 that I will use for my entry models. If you don't know what I'm talking about there, you do need to sort of go back and look at, I think I did a complete entry model video in my CRT guide. It is towards the start. So go and check that out if you don't know what I'm talking about with breakers, IFEGs, or order blocks. I also have covered this in depth on my Twitter or X. Go and check that out if you want to keep up to date, and also join my Telegram as well. Back to the chart here. Once we do see this high set, we are looking for a breaker, which will be the last set of down close candles here before we do purge through this high into a higher time frame key level. We are then looking for this to be actually validated with a close below this level here, which we do see once the price comes below here. Obviously this will be more clear, as I said, when we go to the chart. If it doesn't make sense now, just hold out for then. Also, before we continue, you are looking for an SMT with these highs here, or an inverse SMT with the US dollar. If you are looking for an SMT, I would use Ethereum. For the inverse SMT, obviously the DXY. So back to this, once we do close below our breaker here, that is it valid. So we are then waiting for a retest. And while you are waiting for the retest there, you are sort of looking for a turtle soup to happen as well. Once you do get that, you don't need the turtle soup, but if we do manage to get back in towards the breaker, or it could be an IFEG, or say we had an order block like here, and we did manage to come up and retest it there, then that would also be a perfect entry model there as well. That is the model 1 entry. But once you do get this sort of second entry here, the first entry would be the turtle soup. That is very sort of hard to trade if you haven't traded this type of model for a while. Obviously, it will be a lot harder to catch this turtle soup entry than a change in state of delivery entry. I will cover that if you would like, but I wouldn't really advise it. On a quick note, I do wait for sort of 3 purges, and on the last purge, you are waiting for it to happen at a key time, which would be sort of 3 a.m. to 6 a.m. or 9 a.m. to 11 a.m. So you have your first entry here. I'm not going to fully go into depth on that, as I said. Then you have your second entry within here. You are sort of looking for it to retest the midpoint of this breaker block or your order block if you have it up here. I wouldn't wait for the midpoint of the order block. I would just wait for it to test the bottom of it or the top, depending on whether you're longing or shorting. But with this breaker block here, you would wait for the 50% to be tapped. Obviously, it did go a little bit above that, but in your entry, you would sort of have a limit order set here, your stop loss above that level, and then you would be targeting the low there, which is your external range liquidity. So your first entry would be here, then you have your second entry around this level here. And then if you have actually missed these two, obviously this is for experts. This can be if you are a beginner or an intermediate trader, you can use this entry model. Obviously, if you do miss these and you do see this sort of being played out in the charts, you can then wait for your last entry model, which would be this accumulation and expansion, or IRL to ERL, that you do have right here. Obviously, when you do see this bearish order flow start to play out, you see the change in state of delivery, you are then looking for just sort of continuations. But once you see this start to range a little, you then see liquidity set here, and you do have a liquidity pull above this high here. You then see this high be purged. This will then be your entry model here. Once you see this set, you can maybe wait for it to come back below this high, then obviously set your stop loss above the high there. And then you will then be targeting, your first target would be obviously the lows here, which is this liquidity level. And then your second target would then be this sell side liquidity here. This is then the low of the candle that you do see set here. And then we do sort of move up again and set our closing point. So this is my entire model for a sell trade. Obviously, you just reverse it for a long trade. It is the exact same. If it does sort of confuse you, I do have both versions over on my Twitter, so go check that out. But we will now move on to a live example on the chart. Okay, so here is our Bitcoin chart on the 1 hour time frame. Over here on the right, you can see that we do have the daily chart candles, and you can see that there has been a CRT formed and it has set a high. So if you did mark up the high, obviously we did purge it there, and your first target would be this low. But my model isn't just about CRT. Obviously, you can mark up any high and low of a candle, and you don't know when it's actually going to turn around. If you just traded the highs and lows of every candle, you would get absolutely wrecked. That is definitely not what I do. I trade this with complete context and complete logic. Now, I would actually urge you to screenshot this, try and mark it up like I did with that previous sort of graphic that I had earlier. If you can see it, you will not be able to unsee it. It's literally true. Once you have an eye for it, it will show up everywhere, and it's absolutely beautiful. So we will just sort of draw here and make all the drawings come to light, and then I will explain through to you on this live chart where I would enter and how I would actually get that entry. So as you can see here, we do have our higher time frame key level, which would be this high here. We saw the price move up towards this. A lot of people would be short from this level right here. Obviously, they would have seen this, say, even they shorted this top right here, they would have had their stop losses right there. And say they hadn't taken profit, even after this massive move down here, that would be crazy. Sort of a 13 RR, if you didn't take profit on that, you would be a madman. But there is people out there, and if they did hold out for that, they would have then been stopped out here. So that is the first set of stop losses gone after this high time frame key level is swept. Obviously, on the way up towards that, we do have this sort of engineered liquidity with this trend line here. This is our sell side liquidity down here. Everything's marked up, and I'm hoping you are starting to see something similar to what I did have marked up on that graphic. So the high time frame key level does get taken here. First set of stop losses completely gone, wiped out. So a lot of people would then see this high put in, come back down here. They would be like, oh, whoa, turtle soup, boom. They would have started shorting. As soon as this candle came back down under this level, a lot of people would have sort of shorted this, had their stop loss just above this high here, been waiting for this sell side liquidity to be taken there below, and then they would have got absolutely wrecked. The price instantly turns around and takes them out. They had the sort of right idea, but they were just early because they weren't using Flameson's model. Unfortunately, it's true. I got wrecked so many times, not understanding why that this turtle soup didn't happen after hitting a high time frame key level. So many people will be the same, but the problem is that we weren't all taught that there usually is 3 drives into that higher time frame key level just to sort of wreck as many people as possible. So you see the first sweep takes out the stop losses. Then we have the second sweep here. This is another liquidity sweep of these stops, as I did say. Obviously the people were short from here. That is them completely wiped out. Then we have people starting to see the price turn around. They're like, oh, let's short this again. After this, they're having their stop losses just above this high. They're short. They've probably shorted 3 times already after hitting this high time frame key level, and they're waiting for this price to turn around. We then move, we take out their stops. They're like, fuck it, I'm done. I'm not entering into this market anymore. I've just been absolutely wrecked. My account is suffering and I don't want to short this anymore. Bitcoin is probably going higher. This is when we look for our entry model. Once we see these 3 purges, we then look for our model 1 entry from an order block, which I will zoom into here to make it a little clearer. So you can see this big candle here, big bulky candle. So this is actually an order block right here once this price does close back below it. So you would mark up this level. I do like to just mark it up with a line, but I'll mark it up with a sort of box here to make it a little more visible. So as you can see here, we are only marking up the body of the candle, not the wicks. And once we do manage to close below the body of this candle, this is a valid order block. And we are then waiting for the price to come back up and retest it before moving downwards. This is exactly what happened. The price moves into our order block. This is our perfect entry model. We would be entering short even right from here. Even if you did see the price come back down, say you were a little late, you're an hour late to the chart, you entered here, your stop loss would be set above this high here, and then obviously you would be targeting the sell side liquidity down towards here, and that would be an absolutely insane risk to reward ratio there. I did tweet about this on Twitter, completely covering this model with this example, but I thought I'd do a video for people that sort of couldn't really interpret it from just a picture. And with this one trade alone, you are getting a 6.46 risk to reward ratio, and that is returning around 11.5% without using any leverage. So this is absolutely insane. Obviously, it's the complete reverse for long trade. If the price was just doing this, obviously if we scroll, oh well, it would be scrolling up, sorry. It's the exact same for a long trade. You're waiting for the sort of high time frame key level to be swept 3 times. Then you can enter on the turtle soup if it is at the correct time after you see those 3 purges. But as I said, this is for experts only. If you're an intermediate or a beginner, wait for the Model 1 entry or your breaker entry or even the IFEG. Just wait for a change in state of delivery before entering into the market. So that's my entire model in one video. If you don't understand and do have any questions about anything, please do ask down in the comments. Obviously, I went through the SMT, all the different sweeps. You do need to do it at a correct time. I do use the London Open Kill Zone or the New York Kill Zone, so bear that in mind. If you're having any troubles understanding the CRT or any of these sort of entry models that I talked about, please go and check out my previous videos on candle range theory. I did a full 20 video series covering everything, and this is the sort of last video for it. I just wanted to cover my favorite model and just help everyone that was sort of struggling in the market, because there's so many people entering around this high time frame key level and just getting absolutely wrecked. But usually there is 3 purges, so please just keep that in mind, and this will help you save a lot of money and become a lot more profitable. Now, don't worry, every Sunday I will be coming out with some ICT bangers. I'll be covering other secrets that I haven't fully went into, other easier entry models, not as sort of complex as this. And I just want to sort of help everyone that isn't a profitable trader to get over that ridge and actually become profitable themselves. And I don't want to charge any money for it. There's so many people out there charging money, but I want to do this for you guys completely free. So if you did enjoy, please leave a like, subscribe, turn on those notifications, all that good stuff. If you do have any questions, please comment down below. This isn't scripted, this video. As you can see, I'm talking a good bit quicker. A lot of people have given off about how slow I talk. I usually do talk slower for everyone. I try to script my videos to make it a lot easier for people that sort of English isn't their first language and they may not understand what I'm saying. I try to make it easier for them. If it bothers you me speaking slowly, just speed up the videos to sort of 1.5x or even 2x and you'll be chilling. I love you all, guys. I'll see you in the next video. We're back to usual uploads every Wednesday and every Sunday. Would you like to earn up to $10,000 just from sign-up bonuses? How about copy trading alongside professional traders like myself and these experts right here? With ByteFi, it's easier than ever. That's not all, there's no KYC required for all regional users. Plus, you'll enjoy a lifelong 20% cashback on every trade you make. And when you sign up, you'll also get a 10% deposit bonus. This totals 30% of your total trading budget. The link is in the description below.